Welcome everyone to this presentation on reassessing strategies in 2025, the future of foreign investment in China. In our discussion today, we will uncover the complex and generally the complex landscape of what foreign investment in China looks like today as we move forward into 2025. This is crucial for companies aiming to maintain and increase their competitive edge in this vast market. Before we start today's presentation, however, I would just like to briefly introduce who we are. Woodburn Accountants and Advisors is a leading inbound investment corporate services firm headquartered in Hong Kong with a subsidiary in Shanghai. We help foreign investors with their market entry and expansion strategies in both of these jurisdictions. We help to eliminate the complexities surrounding corporate administration in both jurisdictions. And generally, we tailor make our services based on the needs and requirements of our clients. If you want to learn more about what we do and our service listing, you can go to woodburnglobal.com and you'll find all the information listed there. A little bit about myself. My name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I've been doing corporate services and corporate compliance for the last 22 years. I've helped over 850 international companies across industries and sectors with market strategy, implementation, growth, etc., offering all of the corporate administration services as required within the region. If you're interested in connecting with me on WeChat, here is my QR code. Go ahead, happy to connect with you, or you can just simply email me at christina@woodburnglobal.com. So let's get started with today's presentation. As we stand on the precipice of 2025, the investment climate in China continues to evolve. I hate to be a pessimist, but the fact of the matter is that the challenges that foreign companies face are mounting, while the opportunities seem to be shifting as well. And in this presentation, we are going to be providing Woodburn's analysis on why foreign companies should consider reevaluating their strategies and why this is critical for 2025. Our objective with this analysis is to provide insights on how foreign investors can navigate these basically turbulent waters and make informed decisions on how to proceed within 2025. So let's look at the current challenges in the Chinese market at the moment. There are, as you can see, I've only listed 4, but there are numerous challenges that companies are confronted with today. The ongoing economic slowdown has led to reduced consumer spending, making it challenging for businesses to maintain profitability. Regulatory complexities, often shifting with little warning, pose significant hurdles in operations. Even in the accounting sector, we have recently had a hurdle with the tax officers and who they wish to have as contact people within the organization. They've set limits for accountants to only be the contact person for 5 companies, which will make it very difficult for accounting firms throughout China to handle these type of tax requirements, but then also the tax declarations and whatnot that are being outsourced to us. So it's going to be an interesting turn of events for us. There are obviously barriers to market access, which have become more pronounced, deterring new investments. Additionally, consumer preferences are changing rapidly, demanding more local and sustainable products, which complicates operational strategies. And obviously, as a result, many companies are beginning to look for opportunities outside of China. And those that are within China are reassessing, their investments and basically their operations. Now, we can't obviously do an analysis without going into the geopolitical and economic outlook for China for 2025. Obviously, the current geopolitical climate will continue to play a significant role in shaping investment strategies by 2025. Ongoing tensions, especially in trade and technology, are likely to lead to a more fragmented global market, which could mean that companies must navigate a more complex trading environment. In fact, I did even speak to an American company who was sourcing from China, and with Trump being reelected, is extremely concerned and trying to be proactive in finding alternative solutions where they need to source these products in China. For their specific product type, there are no other countries available to offer the quality and the quantity that they are requiring. And they're trying to figure out whether they have to move the goods to other locations in order to avoid the high import duties and customs duties, etc. So we're already seeing that these discussions are being held in regards to this. Now, this fragmentation obviously can create certain niches. For example, there are promising opportunities in sectors that align with China's developmental goals, particularly in clean energy and advanced manufacturing. But it still leaves those that are not in those industries out, right? Understanding these dynamics will be imperative for any business looking to invest or remain competitive in this climate. So one of the goals is really to look at your supply chains, understand where challenges may exist with this whole geopolitical and economic climate, and understand what solutions may need to be enforced, right? Now, the big question for companies that are operating in China, whether directly from their HQ or through subsidiaries in China, is understanding how they can remain competitive, right? Even as an accounting firm, that is a big question mark for all of us, is how can we remain competitive in a climate that is saturated with accountants, where companies are no longer looking at quality, they're looking at price. And you're wondering how you can remain profitable in the market. So to navigate the complexities of the Chinese market, foreign investors just simply have to be agile. This means adopting operational frameworks that allow for swift adjustments in response to market shifts. Organizations need to invest in understanding local dynamics thoroughly. So market research is even going to be more critical than ever before. Understanding what consumer preferences are, regulatory environments, and obviously then the competitive landscapes in terms of who your competitors are and what they are doing in the market to pivot themselves is going to be all critical. We all feel that technology will play a major role in this evolution, especially in terms of data analytics, CRM systems that can enhance operational efficiency, and basically getting more, less manual labor and more automated within systems. Environmental concerns are gaining traction. Integrating sustainability into business strategies is not just a regulatory requirement, but it is also seen as a competitive advantage, excuse me, that resonates with increasingly eco-aware consumers. The next one is looking at the strategic decisions for foreign investors. Now, given the challenges that lie ahead, foreign investors should take several critical strategic decisions. First, it's essential to reassess the market entry strategies thoroughly. This could involve forming collaborations or joint ventures with local firms to enhance the market penetration. Companies should also consider diversifying their operational base to alternative markets in Asia, like Vietnam or India, which may offer more favorable conditions. However, I have done personally an internal research study on what it takes to incorporate subsidiaries in both these markets. And I can tell you firsthand, it is trickier than it was compared to China 20 years ago. And just to say, China was extremely tricky 20 years ago compared to today. I can tell you, Vietnam and India are even trickier, particularly with the requirements, the financial requirements, the personnel that have to be added in. It really is not as easy. So although I do say that this is a strategic decision, it's something that has to be thought through, it is something that needs to be explored. And you have to be prepared that it's still not going to be as easy as it is in China. It's also vital to adapt supply chain strategies to make them more resilient and flexible. And ultimately, this is to ensure that businesses can respond to any disruptions that may occur in 2025 effectively. I already highlighted the whole evaluating supply chain strategies previously. This is still key today. Focusing on innovation, particularly in alignment with local demands and technologies, will also be crucial for sustained success. So again, all of this are things that should be on your checklist for 2025. And maybe I should also add a point here that it's not just China that is seeing an economic slow turn. We're seeing it in Europe. We're seeing it pretty much all around the world. And I think it is important for these strategic decisions to be made on the HQ level with the support then of the local subsidiaries throughout the world. The next is investing in the future. Now, a lot of companies have approached me saying, oh, you know, if things don't improve, I think we'll probably shut down our operations, liquidate, lay off people, etc. My perspective is looking at things a little bit differently. I think there will probably be layoffs where people have to cut costs and think about it. But with all the effort you've gone through to establishing a supply chain or establishing contacts or establishing a subsidiary, it would be really a pity now to get rid of those things. So although we might have a very rocky 2025, there are ways where you can still maintain your operations, reducing your costs efficiently, but then thinking also about the future, because this is not a permanent situation. We all are hoping that with optimism, things will pick up and things will grow. So perhaps 2025 is the year of investing into the future, right? Key sectors like renewable energy are booming. And this is all driven by China's commitment to environmental sustainability and carbon neutrality. High technology industries, including AI, biotech, semiconductor production, are expected to receive significant government support, creating a fertile ground for foreign firms contributing expertise and cutting-edge technology. The healthcare sector also presents strategic investment opportunities, notably in medtech, pharmaceutical, and this is all due to the demand for innovation in healthcare services, which is continuing to grow. Lastly, investing in education, upskilling talent, investing in your team. This is all really important. Although you may lay off individuals, it is important to do something with the team that you already have, right? And preparing your team for future challenges while offering them, you know, incentives in the form of education, increasing their skill set, making them more loyal to your organization will be key as well. And I will say, you know, nobody's looking to resign at the moment. So it's really about investing in who you have and taking away, I guess, the weak chains, the weak links in the chains. So let's look at the actionable strategies for existing investors in China. Now, for these foreign investors that already have subsidiaries in China, 2025 does present both challenges as well as opportunities. Again, I'm always looking at the positive side of the coin. Companies should begin by regularly evaluating their existing strategies to ensure alignment with the changing market landscape, and particularly next year when you're looking at the geopolitical side of things. Doing a continuous market analysis, which I mentioned earlier, will keep investors informed about whether it's consumer preferences or industry trends or regulatory changes. And by doing this continuous analysis, it will allow for timely adjustments to your business models, and how to improve in the long term. Use 2025 to reevaluate your partnerships and then strengthen those partnerships. And what I mean by this is strengthening these partnerships with all of the local businesses, suppliers, customers, stakeholders. This is really essential for facilitating operations and navigating the regulatory complexities. And also just, it's all about guanxi. It's maintaining those relationships in periods of stress. Having discussions and sharing ideas and brainstorming on how you can improve and work together. These collaborations are vital. And lastly, integrating sustainability practices into the core operations will not only help you comply with the updated local regulations, but it will as well build a brand reputation and a loyalty among environmentally conscious consumers, but also not just the consumers, but also all the local partners that you're collaborating with. And this will then obviously strengthen your competitive edge as a result. So although we can all sit and complain and perhaps not take action about what 2025 looks like, there are actionable things that you might not currently see as profit generating, but could lead to a continuous success for you during this downturn that may occur. As I am pretty sure we are all doing, but again, just to highlight what we should be doing, monitoring the geopolitical landscape is going to be crucial for foreign investors, particularly from certain jurisdictions. And given the evolving relationships and relations between China and other major economies, staying informed about potential changes in trade policies is essential for anticipating disruptions. And then being able to then pivot and update your supply chains where needed. By ultimately understanding these geopolitical shifts, companies can ultimately then adapt their strategies accordingly, ensuring that they maintain operational stability, but also that, they are thinking about the future and that they're thinking ultimately about growth. Now, having this proactive approach will enable these companies to navigate the uncertainties and capitalize on the emerging opportunities. Again, with the goal of remaining high in this competitive landscape. Now, ultimately, what can we do for you? So, I mean, that's our analysis, right? Although I am pessimistic for 2025, I do want to look at what can companies do in terms of market entry strategies, in terms of those companies that are already in China. I do want to look at the positives. Now, I myself have gone through a downturn when we had the lockdowns in Shanghai, which were COVID related. We had to look at how to, first of all, remain stable, right? What did we have to do to remain stable and to remain profitable? The next was looking at our clients and saying, how can we help them to remain stable and profitable, that they don't leave us? We then had to look at our partnerships and see what we could do to strengthen those. Although it was a very quiet period, the goal was to really remain afloat, right? And this is something that at Woodburn we want to offer to companies in terms of 2025 is obviously looking at creating or creating new business models, customizing existing strategies to what we can foresee happening in 2025. Another is obviously we're up to date with a lot of the regulatory compliance. If we're not in your industry, we can always find this out for you. And then it's also about facilitating local partnerships. I think this will be a key thing. Even though, unlike COVID, we're free to move around, we're free to meet people. I think this is the moment in time where it's important to develop these network opportunities, because people will be the ones with the ideas, where you can brainstorm, where you can share and form this type of collaboration in order to, again, stay afloat, remain strong, and hopefully then think about 2026, 2027, 2028, etc., in terms of growing. The goal for everybody is to remain strategically successful in China and see then how we can grow and develop. So just to finish off, again, this is not a very long presentation today. It's really just to analyze a little bit about 2025, step away from the pessimism, and look at the positives that you can do. The goal was also to really look at actionable strategies that you can implement. So we all know that the landscape in China is evolving. It's marked by significant challenges, but there are emerging opportunities which you just have to be open-minded to and see. Now, while the traditional pathways to success may be obstructed, a careful reassessment of business models, of strategies, will provide you a way forward. And as we approach 2025, strategic foresight, adaptability will be essential for maintaining competitiveness in the market. You've got to be able to make informed decisions, leverage local insights, invest in high growth sectors, and foreign investors should capitalize on both the difficulties and the possibilities that lie ahead. Now, with a balanced approach, right? Everything has to be balanced. With a balanced approach of caution as well as ambition, we believe that foreign companies can still, well, let's put it bluntly, can survive 2025 and hopefully also be a little bit successful as well. So that is the end of today's presentation. I always want to finish off by providing a reminder to everybody. Entering and operating in China can be an extremely rewarding journey with the right preparation and strategies in place. And I do want people to keep that in their minds. Now, for those of you that are watching live, if you would like to add questions into the chat box, please go ahead. In the Q&A section of the registration form, there were actually questions that were highlighted, so I have put them all together, and hopefully I'll provide a concise Q&A, if you will, regarding this webinar. So the first question that popped up was, what are really the primary challenges currently affecting foreign investment in China? The primary challenge or challenges really include the ongoing economic slowdown, the increased regulatory complexities, which we are seeing in almost every industry, as well as the heightened geopolitical tensions that are creating a more unpredictable business environment. Now, because of these three things, ultimately foreign investors have a fear, because ultimately most of them don't have the capital to invest more. They're very cash flow restrictive, and they are trying to protect their assets. And obviously, all of their goals are, we've got to protect the headquarters first before we think about our subsidiaries. So obviously, all of these factors in terms of fear, cash restrictions, economic slowdown, geopolitical tensions, regulatory complexities, these are all market access barriers, right? And so it's important to then reassess your strategies related to this. The second question that came in is how can foreign investors identify alternative markets that are more favorable than China? Well, I've done this exercise myself. So I looked at all countries within Southeast Asia. My market analysis was really looking to understand what it takes to incorporate a subsidiary. I already have a pretty good idea of what those markets look like in terms of foreign investment. And so it was really to understand what is the financial requirement for us to commit into that market and to set up an entity, maintain that entity, hire staff, etc. And it's hard. This is not an easy exercise at all. For us, we looked at the rest of Southeast Asia. So we looked at Vietnam, India, Indonesia. Feel like I'm missing a couple. We looked at the United Arab Emirates, Philippines, etc. Now, although you will find that generally costs are more favorable in these jurisdictions than they are in China, the rigidness of incorporating an entity and the upfront capital that is required is what turned us off those markets for now. It's difficult to invest in a new market when there are requirements on having local staff that you've never met before, be responsible for bank accounts, be responsible to government authorities. These are sort of restrictions you don't necessarily want to do in this climate. However, if you have partners that you want to set up joint ventures with, this is a whole another aspect, right? So it's really doing this research to understand what those markets look like, and then understanding what are the requirements and costs associated with expanding into those regions. And by all means, you don't have to set up entities there, but it's understanding what the partnerships will look like, how the government regulations are, etc. The third question is, what specific sectors are presenting growth opportunities for foreign investors in China? So the areas that I mentioned in today's presentation are renewable energy, high technology such as artificial intelligence, biotech, healthcare, medical devices, as well as education services. All these areas are likely to benefit from government support, and we are noticing a growing consumer base interested in these innovative and sustainable product categories. The fourth question is, what role does sustainability play in foreign investment strategies compared to previous years? Well, first of all, sustainability is becoming increasingly more important in compliance as well as in brand reputation. Investors that integrate sustainable practices into their operations are not only meeting local government requirements, but they're also appealing to customers. And this dual focus obviously enhances customer loyalty, also helps to brainstorm with partners, and it just offers a competitive advantage. Because of the economic slowdown, we are encouraging foreign investors to place focus on this. Sustainability is not an area of expertise for us, but it's an area we're looking into ourselves as something to just put on our action plan. The next question is, how important are local partnerships for foreign investors in China? Well, my belief is that you can't do things alone, regardless of what jurisdiction you go into, whether you're looking at alternative markets like Vietnam and India, or Indonesia, or Philippines, or the United Arab Emirates. You can't do things alone. You need to have an ecosystem of partners that is going to support you. Partners collaborating with firms, is a must in terms of gaining local insight. It's a must in terms of building credibility. And ultimately, they are the ones that are going to help you facilitate your transactions and help you to grow. So, my belief is that 2025 will be a year of refreshing partnerships, spending time with partners, analyzing, brainstorming, kind of doing coaching sessions, if you will, one to another, on how we can build up this business in a time where we have this slow turn. The next question is, what types of adjustments should companies make to their supply chain strategies in China? So In terms of companies focusing on enhancing supply chain resilience, it's important to diversify your sourcing locations if you can. I totally understand that there are some companies who cannot because of the niche of products that they're in. They should consider potentially doing certain local production themselves. I mean, these are all topics that came up during the lockdown in COVID in 2020, 2022. They should be evaluating how they can adapt their supply chains based on the various jurisdictions that are out there. Then they should also think about technology integration. And by technology integration, I'm talking more about improving transparency for customers, for yourselves, for your team, creating more efficient supply chains by looking at this technology. And obviously, when you have more transparency and clarity over a supply chain, it also helps you to adapt quickly when there are potential disruptions. The next question is, as a business already operating in China, what steps can I do in Q1 or even now, in December or Q1 2025? So the first one, I mean, I hope people have done this as they were doing their budgets, but conducting a comprehensive review of your current strategies to identify areas of improvement is always key. I think for 2025, doing continuous market research will be extremely important. So also identifying what would be for your company that would be important to research. I don't mean doing a continuous market research on all aspects. Look at the key foundations that you need or the key KPI items that will help you to analyze your business and continue to do that research. Like I said earlier, we talked about local partnerships. That's a foundational item. Integrating sustainability practices. But I think probably the most important for me is looking at your talent. What talent do you have on the ground in China? Whether this is employees or also even partners, right? Looking at the specific talent. Do your partners need to upskill? Do they need to evolve? Does your employees, do they need to evolve? Do they need training? Do they need to be equipped with something that you can strengthen their skill set really within 2025 to then blast that out to the world in 2026? Investing in your partners and your team might be important. Again, it's all going to be about how much financial resources you have available for this. But, training and upskilling for me is more a time requirement than it is a financial requirement. So it's really analyzing that carefully and understanding this. Question 8, I think, is a fundamental and very key. Are there regulatory resources and support available to foreign investors in China? Yes, there are various resources that are available, whether that is through your specific government agency or trade agency, general trade associations, chambers of commerce, etc. Looking at specific or expert consulting firms. Like I said, at Woodburn, we have blogs that highlight all the updated regulatory compliance required. We focus all of our blogs based on our own services and all the updates that have to be made there. But there are free resources, out there through newsletters of companies, etc. So it's really important to make sure that, again, knowledge is power. The more you know, the quicker you can act. And it's important having that ecosystem available to you when you have to do that. Last but not least, how do we stay informed about ongoing changes in the geopolitical landscape? Well, basically, news sources are number one for us. We are regularly following up on a variety of different news sites, whether it's Chinese newspapers, US newspapers, British newspapers, and media outlets. We are using all of these sources to update ourselves on what is happening. We are reading up on market analysis reports on trends that we are seeing, just generally speaking, whether it's on foreign investment. We don't specialize in outbound investment of Chinese companies, but it's also something I'm looking at, especially with a new regulatory requirement that has just popped up. Going to industry forums, logging into webinars, all of these things are out there for you to, again, understand the geopolitical landscape and understanding people's opinions on it. What we've noticed is that everybody has a different opinion. I have read a lot of articles where people see that Trump coming in is a positive for China. Listen, I'm open-minded and I'm open to that. It would be great if that is the reality. So I think it'll be interesting to see what pops up, but be open-minded and read all of the different opinions, even though you might not agree to it. It's just important to know what people are saying and doing out there. So that was the last question that popped in, and there are no questions that popped in from the live audience. So I'm going to leave it there. Apologies for my cold. I hope everybody has taken away something from today. And if you would like to have a chat about reassessing your strategies for China, don't hesitate to reach out to us. We'll provide you with those details. I wish everybody a great day. And to end off this year's of webinars, I would like to wish you a very Merry Christmas and a Happy New Year. Take care and goodbye.